Couple of great topics in today's video. I'll have the trade of the week coming up for you in just a moment, and we're going to be talking about which of the 4 Micro E-minis or which combination of them might give you the most bang for the buck. I'll give you the facts and figures and help you decide what might be best for you. These are the 4 Micro E-minis. Perhaps the best known or the most popular to the general public would be the Dow Jones Industrial Average. Now, you can see the symbol here is MYM, and on this particular moment, it's 260 points up for the day, and the last value of the DJIA was 34,855. Now, each one of those 34,855 counts for 50 cents, so I just have that. I have $17,427.50, and that would be the nominal value at the price for which the Dow Jones Industrial Average is currently trading. Now, the S&P 500 is the most largely popularly traded stock equity index future in the world. NASDAQ comes in second. And the S&P 500 is a basket of many, many different kinds of stocks. Whereas when you contrast it with the NASDAQ100, and the NASDAQ100 has a unique feature. It does not contain financials, insurance companies, and banks, and the like. And so it's primarily comprised of the 100 biggest tech stocks in the markets. So we think of the NASDAQ as the tech stocks. The S&P is the wider basket with many, many different kinds of stocks. Now, you'll see on a day when the tech stocks are having a really strong day, the NASDAQ will gain more than the S&P and the other indexes. And that's just logical because those are the stocks, the tech stocks that make up those 100 in the NASDAQ 100. The Russell 2000 are what we call a bigger basket, 2,000 stocks, thus the 2K, and they are what is called, or what are called the small caps, the smaller capitalization. Now, if you take the number of shares outstanding of a company and multiply it times its share value, you get what is called a capitalization, the total worth of all the shares in the company. And that's how you measure the size of the company, at least for the purposes of the stock market. Okay, now comes the fun part. We're going to figure out how much money each of the 4 Micro E-minis change at a certain time and compare them to each other. Now, this is just a random day and time I pulled out, but it's typical. The Dow Jones Industrial Average, the MYM, we see right here, it's changed 260 points. Now, at 50 cents a point, that's a value change of $130. Now let's do the S&P. The symbol is MES. The S&P has changed 63 points so far for this day, and 63 points valued at $5 per point would be $315 that the S&P 500 has varied. The NASDAQ 100, symbol MNQ, moved 379 points, $2 a point. That's a whopping change of $758, more than twice as much as the S&P 500 on this particular day. And finally, the Russell 2000. 2,000 stocks, the broadest average and the slowest in terms of volatility of the 4. 45.4 points at $5 a point is $227. So just remember, you got your Dow Jones average, your S&P 500, that big basket, all kinds of stocks, the tech stocks in the MNQ, the NASDAQ 100, and that very broad, slower moving average, the Russell 2000, called the M2K. As an exercise of practice, I suggest you do this during the days when you're trading and you have a few moments. It helps you become more mindful, more aware of the correlation that exists between these 4 Micro E-minis. So just try that out when you get a lull in the action. Take the changes and multiply them by the cost per point, and you begin to understand the correlations, and it helps you make a decision on when and what time to trade one Micro E-mini or another. I think you'll learn a lot by giving that a try. The live trade for today is going to be coming up in about 1 minute, so hang in there for that. I want to talk to you just a moment and tell you about why these Micro E-minis are such a game changer. Until they came along in May of 2019, you would have to trade at $20 and $50 a point. You had to have a large account, thousands and tens of thousands of dollars very often. So what happened was most of the funds, large hedgers, and professional traders were the ones who could have those large accounts and trade the stock equity index futures, which are the four we just talked about. But in May of 2019, they came out with a new product called a Micro E-mini. It's a 1/10 size contract, which instead of trading at $50 a point, you can trade at 1/10, $5 a point. Or in the case of the NASDAQ100, instead of trading at $20 a point, you can trade at $2 a point. Now, what's fantastic about that is it makes this kind of trading affordable to home investors. And the proof is in the results, because these contracts, these Micro E-minis came out in May of 2019, and in the first year and a half, traded over 1 billion of these futures contracts. This means hundreds of thousands of home investors are enjoying the profit, the challenge, and the fun of being able to trade the popular stock equity index futures, the S&P 500 and NASDAQ mostly. And it's just a tremendous game changer for smaller investors who have a portion of their assets they can allot to a category of higher risk trading. This type of trading is too risky. It's almost like casino odds sometimes. It's too risky for your nest egg IRA and for your college funds and things like that. It's high risk. You can lose. It takes a while to learn. And that brings me to the topic I'd like to tell you about now, and that is my book. When I heard that these Micro E-minis were coming out in May of 2019, I set out writing a book, and I had it published by November of 2019, and I think it's still the only book that is focused exclusively on this one and only topic of day trading the Micro E-minis. We're almost up to 300 5-star reviews on the book. Thousands of people have used it. It speeds up your learning, because when you're learning a new subject, you need to know which terms and which things are more important than the others. And being able to do that by having the help of a book and written material to go with it will speed up your learning and make it a little more accurate for you too, and easier, I think, at times. And it only sets you back the price of a large pizza. So take a look, see the book link below. And now it's time for the featured trade of the week. These trades are by far the most popular feature on the channel. Be sure and subscribe and hit that notification bell, and you'll receive an email or a text to remind you, and you won't miss the next video. If you're new to the channel, you should know I use a consistent same setup with 5-minute candlesticks, MACD in the lower pane set on the 12-26-9 settings. Those are default in most software, by the way. You won't need to worry about changing them. At 9:30 Eastern Time, the market opens a little flat, then goes down, up, and then about 5 minutes till 10 o'clock. The market's getting weak again. It's losing some momentum, as you can see by 1, 2, 3, 4, 5, 6, about 30 minutes of declining prices up until the time I pull the trigger on this trade, which is going to be at 10:23 in the morning. Now, looking in the lower pane at the MACD, you can see the vertical green lines are also indicating a decrease in price momentum. The green line on top of the red line is dipping down a little bit. And so I chose this time with those indicators showing me the market has at least some weakness. It's a good time to take a chance on shorting one S&P Micro E-mini contract. Okay, now I'm going over to the live trade screen. First, I want to show you this. A bracket order. It enters the entry price, the stop loss price, and the target price all at one time. There's a link called the bracket OCO in the text below this video to show you how to do this exactly, to use that bracket order to initiate the trade. So that's what I'm doing now. It's really nice because the stop loss and the target, it has a built-in calculator that you put in the price, and it calculates the dollar amounts for you automatically. Now, there's no time limit on how long you can take setting up your bracket order. You can take all the time you need or cancel and just trade a different time. So there's no commitment, just to take a look at the prices and see where to put those things. Trade's underway. I'm short at 43.73 and 3/4. One S&P Micro Emini. I'm trading at $5 a point now. I immediately get my Tasty Works mouse out, and I don't need my stop way up there at 43.80 with the market trading down at 43.74. And always I'm thinking of ways to reduce the risk on the trade. So I moved my stop to 43.77. As you see that Tasty Works mouse, I just hold the left mouse button down, and I can drag that stop price up and down as many times as I want. Now, the stop's at 43.77 right now, and that is 3.25 points that I'm risking on this trade. That's only $16.25. For the moment. Now, the trade is already down at 43.73, so we're in the money, but ever so slightly. But the market seems to be moving my way. We're getting some more down action here. We traded down to 43.71 there momentarily. You can see now I'm just moving the stop up a little bit to make it an even thing. I use those little arrows on the edge of the rectangle on the left margin there. Stop is 43.77 and 3/4. That's a nice even now. 4 points, $20 at risk on this trade. And, this is an easy trade so far. Now, let me tell you what I mean by that. It's actually very simple. I haven't been under any stress or duress during the trade. 2 minutes. I've been $10 up, $10 down. If anything, I'm a little impatient, but that's just my nature, and I have to keep a cap on that. But the good news is I'm not having any big drawdown on this trade. I'm not under any stress. So I just have to be patient and let it play out and see if this is something that I'm going to have to exit or if it's still going to hold some potential profits for me. And right now, I'm only risking $20 or so on the trade, $25 now. That's not enough to make me panic. You're going to lose 40% of your trades, and you got to learn how to lose, believe it or not. And nobody likes that because nobody likes to lose, right? It's one of the paradoxes of this type of trading. 43.73.50, 74. See, I'm still right at just at even money, give or take $5 in this trade right now. And I fast forward to about 5 minutes into the trade. Still, I'm hardly up $5 in the trade. Not a lot of progress. Now I'm getting somewhere. I fast forward again to 7 minutes into the trade. I'm trading down at 43.66 now, and the trade's finally getting a break here, and I might be able to make some money with this thing. Let's see. I know I'm not going to lose any because I've got a free trade. My stop is below where I entered the trade at, so I cannot lose even 1 penny on this trade. So this is the fun part because I know nothing bad can happen. Now, 43.66. I'm going to get my Tasty Works mouse out here. My stop's at 43.73. And where to go? Where do I put the stop? How do I make this decision? Well, right now, the price, you see over there on the right, the price is still dropping, so I'm holding down the left mouse button and got to stop it out there at 43.68.75. That means I've got $35 locked into the trade. But look, it's going down even more. 43.64 over there. So I'm having to make a decision right now. Do I want to move that stop down closer, or do I think this thing's going to run and go down even further? 43.63.50, and I've had all the fun I can stand right now. So I go get my Tasty Works mouse out. My stop was at 43.68.75, you see, and I'm dragging it down. I'm trying to follow this thing as it goes down so I can lock in some profit, and wham, I get stopped out. Not a bad thing. 43.64.5 is where I was stopped out. Okay, there's the numbers on the trade right there. 9 minutes, wiped up about $46.25. This trade was slow to develop, but then it really took off. And didn't have very much drawdown. and I captured about 80% of what was available to me there. And the question is, if I had stayed in the trade longer, would I have made more money? And if that's true, I've got to decide then how I'm going to feel about that. Well, anytime I can make almost $50 in 9 minutes, it's not going to be a bad outcome, right? But I'll take a look and let you know. Let's check it out. Well, here's the chart 10 minutes after I exited right here. You see, I got out at 10:32 at 43.64.5. And candlesticks are 5 minutes wide, so 1, 2, 3, 15 minutes later, I was trading at 43.65 and 3/4. Now, it did go all the way down to about 43.58, right about there. But I really doubt. I probably would have hung on to that. It's hard to guess what you would have done, right? Anyway, am I that good? No. That was just pure luck. Help me out, if you will. It's kind of like a vote. If you want to see another video like the one you saw today, hit the like button. I count those and keep track of them. As far as trading advice, I can leave you with one thought today. You've got to have some fun in this type of trading. It's very unpredictable. You're going to have some losses, and you have to learn how to be patient. Now, the key to it is not to overtrade. Trade selection is everything. Be patient. Don't look for a place where you think you're going to make a lot of money and then do a trade because of FOMO, the fear of missing out. That's the recipe to blow up your account. What you want to do is rule number 1. A professional trader always is first priority is avoiding risk, and trade selection has everything to do with that. Be patient, wait for it, and of course, you're going to have some losing trades along the way. And on that side, you got to have the discipline to be able to pull the plug rather than let it run away and take the profits from 4 or 5 good trades just because you hesitated to take a loss. And that's a tough lesson to learn. It's so easy to say and so hard to do. I'm Don Singletary. Thanks for being here today. I hope you enjoyed the trade. Take a look at the book link below, and there's information on Tastyworks down there. And also, if you're a beginner, there's 2 playlists with about 4 or 5 videos on each one. Look for the beginner's playlist link in the text below the video. I hope every day is a payday for you.